Well, the sanctions announced so far are actually in themselves quite limited. They apply to individuals and to the companies that they own. But the fear that sanctions could be extended and become more meaningful has had a much broader impact. First of all, we've seen a dip in business confidence, so there's now an increased risk that Russia could suffer a recession. And capital inflows have dwindled very sharply and capital outflows have risen. We've seen that the syndicated loan market to Russia has almost closed down and there have been very few public bond issues. And thirdly, it's blown monetary policy off course. Because of the pressure on the ruble, central bankers had to raise interest rates, and that will have a cost in terms of growth down the line. Yes, we think that's quite likely. Whether sanctions are imposed, further sanctions, depends really on the situation in Ukraine. Now, the EU and US demanded that Russia use its influence to de-escalate the situation and end the occupations, both in eastern Ukraine and the protesters in Kiev as well. But in fact, we've seen the opposite of that. There's only been an escalation since then. So the question now is whether the sanctions take the form of wide-ranging trade or financial sanctions, or whether they're merely an extension of what we've seen. We do think there is a risk that trade or financial sanctions are imposed, but that it's probably less than 50%. Well, we put Russia's sovereign rating on negative outlook on the 21st of March, and that was as a result of the potential impact of sanctions. We see the main impact as follows. There's a risk to Russia's balance of payments and to its strong international reserves position. That's because borrowers, if they're cut off from foreign capital markets, will find it hard to refinance those obligations. And it means that ultimately they will get the hard currency from the central bank, and it will result in a drop in international reserves. The second risk is that capital inflows having dried up, you also see higher capital outflows. We saw this already in Q1 when net movements of private capital amounted to a $50 billion net outflow. And the third risk is to growth. If Russia is under a sanctions regime for a prolonged period, then it will result in a period of lower growth and stagnation, and that ultimately would have issues for the rating as well.